2024 housing market predictions and the impact on home sales. Hello again, welcome back to my channel. So I spent some time watching the Altos Research YouTube channel, and I wanted to share my thoughts about their predictions. I also spent some time researching what Zillow has to say for their 2024 predictions. So first off, Altos Research. Inventory increases as rates increase and falls as rates fall. Okay, this is kind of general knowledge, but rates going up leads to more inventory and rates going down leads to less inventory. So higher rates result in more buyer competition and lower rates result in less buyer competition. All right, I wanted to set the stage for you. So home sales are projected to increase in the first quarter of 2024. Home prices and transactions are expected to experience a slight year-to-year over gain. So number of transactions, just slight. So consumer sensitivity to mortgage rates definitely plays a significant role in the forecasted transaction volume, correct? Makes a lot of sense. So the lower rate, it spurs demand and increases the transaction volume. So consumers, like I said, they're more sensitive to this. But are we forecasting higher rates and higher inventory to 2024? That's the question. So inventory usually peaks in August or September. So the anticipated curve for 2024 assumes that rates remain relatively stable, as higher rates generally yield a higher inventory. So we're assuming that they're going to stay relatively stable. So home prices are expected to climb in 2024, as I mentioned, but the current data does not indicate a surge in inventory, with investors and Airbnb owners to speak of not selling their houses in bulk. So the sky is not falling. So only a few markets in the country have more inventory than in the last decade, but they are starting to normalize. So increase in new listings and immediate sales could lead to a bullish sign for the market, right? Well, if we are expecting these home sales to rise in 2024, the high demand for the homes during the pandemic resulted in immediate purchases of 28 to 35% of listed homes. So I don't think it's going to be like that, right? So anticipated increase in demand and sales in the first half of the year due to the lower mortgage rates. Exactly, right? Well, we are going to see a little bit of an increase, but the number of new contracts for single-family homes will be slightly higher compared to last year. But the days on the market for the homes is still shorter than the pre-pandemic normal, right? Due to the supply constraint, because there aren't a lot out there. So home prices in the U.S. are currently 1 to 3% higher than last year. And the median price of new listings is a leading indicator for the future market trends. So home prices, the prices are expected to drop in January before rising again in the new year. So here we are in January. So now they're slowly going up. So the indication of flat home prices for 2024, well, pending sales are sensitive to rate changes, so no indication of any dip or surge in the home prices. Anticipating a flat year-over-year market with a normal range of price reductions? I don't know. Tighter inventory and greater demand will lead to more transactions, right? And upward pressure on home prices if prices keep rising. So the percentage of homes on the market with price reductions in 2023 peaked at 39.2%, which indicated a weak market. Well, however, it's expected to fall over last year's holiday season, which it did, and then increase in the spring with fresh inventory, which totally makes sense. So home prices, though, are experiencing price cuts, and it's due to the weakness in the housing market. So we actually may be at the end of an inventory shortage now. So if rates stay even, then we'll have a slight gain. So as I mentioned before, the consumers are very sensitive to rates and the changes in the rates, right? That only does make sense because getting a mortgage and a mortgage rate, that obviously, get a house, you need a mortgage most of the time. So let me speak about Zillow's predictions. So the housing market, Zillow says they reset in 2024, which everything resets anyways in a new year. But so they basically said new listings are no longer declining. So improving supply and more inventory from the new construction, right? New construction homes in 2024. So basically homes are coming on the market, they say, 14% below pre-pandemic levels. And the flow of existing homes on the market is showing improvement, but they also say more needs to be done. Well, you can only do what people are willing to do, buy and sell. So they are showing housing market optimism for 2024. So they're stating that new listings have bottomed and reducing the drag on the market. So they're also saying that rent growth has slowed to about 3.3% due to the increased inventory in the houses. So the economy is slowing, but on a strong footing. They also talk about how the GDP has been slowing down, with the real GDP estimated at about 1.2% for quarter four. So the labor market is strong, and unemployment, they say, is at 3.7%, and wage growth outpacing inflation. I don't know. But they're saying headwinds for the U.S. economy in 2024, also like there's the geopolitical tension and the global GDP impact, and they definitely do. So potential effects of a corporate tax cuts, expiration, and debt maturing for large non-financial companies. So there's going to be a careful balance between mortgage rates and job stability. So a slowdown in hiring and rising unemployment could impact the housing market. So, wishing for mortgage rates to drop drastically could signify trouble in the economy, because we don't want them to go that low, supposedly. But affordable markets attracting more people, they're saying North Carolina, Nashville, and Florida, they're attracting people despite being expensive. So these markets offer a larger mix of housing options and are building substantial amount of housing, right? Driving the hottest markets in 2024. Well, it's warmer than in Michigan. So mortgage rates are easing, and it's a good time to invest in housing. Zillow talks about, of course, they are Zillow. They're all about housing. So they talk about looking at homes in Tennessee, Bellevue, Tennessee, near Nashville, taking advantage of mortgage rates, right? So they've also talked about the rare scenario of easing mortgage rates and softer housing prices without being in a recession, they talk about. Well, they mentioned that unemployment rate was at 3.7%, and that does present an amazing opportunity for home buyers. I say if you can afford the house, though. So I want to talk about, in a nutshell, what these both talked about and what they agree on and what they really kind of don't agree on, or their different takes. So here are the key points where they agree and the key points where they disagree. Let me start with the areas of agreement. So, increase in home sales, right, in 2024. Both sources can predict, or they do predict, an increase in home sales for the year of 2024. So this consensus suggests a general market recovery, or at least a more active market compared to previous periods, or I say last year. So here, let's talk about the influence of mortgage rates. So both emphasize the significant impact of mortgage rates on the housing market. They agree that changes in rates influence buyer behavior, inventory levels, and overall market dynamics, right? Inventory fluctuations. So both sources note that inventory levels are influenced by mortgage rates, although they describe this relationship in slightly different terms, right? The general consensus is that rates and inventory are interconnected, and that is so true. So let's talk about the consumer sensitivity to rates. So there is agreement that consumers are highly sensitive to mortgage rate changes, which in turn affects their buying decisions and the overall market momentum, right? Let's talk about the areas of disagreement, or let's just say different emphasis, right? So we did talk about the inventory, but the inventory and price trends. So while both sources discuss inventory levels, there seems to be a difference in the specifics. So Altos Research suggests an anticipated rise in inventory, possibly leading to more transactions, while Zillow focuses more on improvement in the flow of existing homes to the market, right? Noting that it's still below pre-pandemic levels. So, home prices. Altos Research indicates a possibility of flat home prices with some fluctuations, price cuts, and weakness. right? Whereas Zillow doesn't explicitly forecast flat prices, but notes a slowdown in rent growth, which might imply a stabilization in housing prices. Another disagreement in economic factors. Zillow provides a more detailed analysis of broader economic factors. Well, I didn't discuss more, but also Altos Research did go into that a little more. I just chose not to highlight it. But I did want to mention here that these geopolitical tensions, they do obviously affect mortgage rates, inventory, all that extra stuff. So basically, without delving deeper into broader economic conditions, but market optimism and challenges. So Zillow expresses a form of optimism for the housing market in 2024. I would like to stay optimistic also, citing improvements in listings and supply, right? So Altos Research's perspective, while also positive about certain aspects, like an increase in the home sale, they seem to be more cautious, right? Particularly regarding market sensitivity to the rate changes and inventory fluctuations. Basically, like I said, nobody's got a crystal ball, so we just got to wait and see what the interest rate's going to do. So in summary, while there is general agreement on the increase in home sales and the significant impact of mortgage rates, the two sources offer different perspectives on the nuances of inventory, price trends, and the broader economic implications for the housing market in 2024. So everybody's got to live somewhere, but these are like things to start looking at and thinking about at the beginning of the year. So let me just say, friends, navigating the housing market can be quite the roller coaster. That's where I come in. Think of me as your go-to buddy for all things real estate, and generally just a nice person. Not that that matters, but I am your go-to person for real estate, or hope to be. So whether you're looking to buy your dream home, sell your current one, or you just want to chat about the market, I got the latest scoop and some personalized advice just for you. So I'm always here to help you make the best decisions with confidence and the most information provide you with the most information to make those decisions. So don't forget, if you want to stay in the loop, be sure to hit that subscribe button, give a thumbs up if you like what you see, and the new term, smash that notification bell, which just means click it. I'm not a millennial or Generation Z, but this way you won't miss out on any of the juicy details or opportunities that could really make a difference for you. So let's make your real estate dreams come true together.